Investors and traders, welcome to the channel Market Chart Pattern. Today is 10th of September 2023, and we are going to take a look at the key US tech stocks as we always do for this segment. Apologies, not able to do more videos last week because of travel. So I'll try to make up this week for the lack of videos. So what we are taking a look at the Apple computers. This is a long-term monthly chart. Over the past week, there has been significant movements in terms of price action in the Apple stock. So that's why I wanted to take a look at the Apple stock from a longer term perspective. Then we'll move from monthly chart to the weekly chart, and then finally to the daily chart and see what sort of patterns we should be looking at. So what we can see is that Apple stock has been rising since 2019 in a nice uptrend. And this trend line, which you see in blue dotted line, is connected to 1, 2, and 3 points here, and it is an ascending trend line going up. What we also see is it's more visible on the weekly chart, but on the monthly chart, we had reached a 1.272 Fibonacci expansion of this range here, and it was approximately $200 per share level. And we had pointed out in our videos that we had a confluence of two ratios coming together, visible on the weekly chart. It could prove to be a significant resistance, and what we have seen is price pull back for the couple of months. Now, one thing I would like to point out is on the monthly chart, this $170 per share level is important because of the 38.2% Fibonacci retracement from this swing here. And also the other key thing is a concept of market symmetry that we like to take a look at this channel. And what that is we like to compare the previous swings. So these are the swing lows, and if we take this swing and we project it from this swing's high, it came very close to where the bottom was. The bottom was 124.17, and this gave us a target of roughly about $120 per share level. And this is something which we like to call a market symmetry, and it's also a pattern. This pattern formation is a one-to-one projection, so A, B, C, D right here, more visible on the weekly chart. So if we just take this and clone this, the bottom of this, in terms of if the correction were to exceed this 38.2% Fibonacci retracement, or perhaps a little bit lower, because we do have a few lower targets which I will explain on the weekly chart, then there's a possibility the stock could pull back right into this trending line here, trend line right here. So somewhere in the region of about $140 to $150 per share level. Again, we are watching this, and these are monthly charts, so they are really long-term charts. Then let's take a look at, this is the weekly chart of Apple stock. So here we had a confluence of two things coming together, a 1.272 Fibonacci expansion of this range, and also if you take this A B swing and you multiply this one with 1.618, so the projection also came around the $200 per share level, roughly speaking. And what we are observing now is which could be a B C D one-to-one projection lower, which could take the stock somewhere around the vicinity of $160 per share level, so 162 to $160 per share level. And we also have this ladle line coming here, which could also prove to be providing support for the stock. Now the really key thing is for the stock, on looking at the weekly chart, this $120 per share level, it's really important, and the reason is because of the confluence of so many Fibonacci ratios coming together here. When the market was trading right here, there was quite a lot of negative sentiment for Apple stock. However, we were turning bullish and we were giving higher targets for the price to reach, and the reason was because of these Fibonacci confluence levels coming together. Let's take a look at the Apple daily chart. Similar kind of picture. Here, if this correction takes the form of one-to-one projection ABCD, we do have rising 200-day moving average, which could also provide support level. roughly in the region of about 165 to $160 per share level. So anywhere between 170 to $160 per share level is a good support from a technical perspective in the Apple stock. This is something which we're watching. Let's move on to Tesla. So the Tesla stock has been consolidating over the past week. There have been 5% moves low on the 1st of September, and then we had a sharp rally higher, and then we had an inside bar, and then we had another bullish bar. And last Friday, the market tried to rally, but sellers came in right at the top of the last Wednesday, 6th of September, top for the candle, and the market did sell off. However, it seems to be, or it appears to be, consolidating right here. One of the key things for the pattern that we are watching is this 100, 200, and $10 per share level, which is this where I have written abandoned baby bottom pattern, because the way we are looking at it is this possibility that in fact it could be another A, B, C, D pattern to the upside. If this low is taken out, then we might be looking at a pattern A, B, C, D to the downside. However, we have this support line coming here, this trend line coming around here, and it does appear to be, and we have this apparent baby bottom as well, that most likely the stock is just consolidating and also has a strong support from a momentum perspective to the upside. Most likely the pattern is to the upside. Now let's take a look at this on the weekly chart. So on this weekly chart here, this is the week when on the 17th of July, when the market had reached the $300 per share level, and we had also actually in fact identified this level in advance, because we had the 1.270 Fibonacci extension, plus we had a little bit below $295 per share level, the 61.8% Fibonacci retracement. So we had a confluence of two ratios coming together, and again that was going to be, in per hour analysis, a key level to watch, because it could be a key resistance level. And this is what we have seen. We have seen the market in fact pull back from this level for quite a few weeks now, and now it's trying to rally. We have had 3 positive weeks, but the rally, the weekly bars are not as strong. So on the daily chart we do see the price consolidating. Now the pattern that I mentioned is the one we are looking at, is a potential A, B, C, D. That is dependent upon this low of 14th of August 2023 not taken out to the downside. So as long as that remains intact, and we have this ladle line in purple giving support around here as well, the next key level we were looking at is about $350 per share level, and this is going to be a very key level, because it is the 78.6% Fibonacci retracement. We have a 1.618 extension, plus also an 1.618 Fibonacci expansion of this BC leg coming right here. So in my opinion, this is what is going to basically where the game is going to be played, whether the stock is going to find extreme resistance here, and we get into a strong correction to the downside, or it's gonna even be the case for whether this was a bear market rally, is also going to be here at $350 per share level that we will have to look at and assess. Because what it would also mean is it would be a 1, 2, 3, a 3 drives to the top pattern as well, with this high below the all-time highs reached in November 2021. So this is something which we will need to pay very close attention to, $350 per share level. Now the long-term subscribers to the channel also know that we have a higher price target. So if the market is able to convincingly take out the $350 per share level, that's going to be a first indication that we are in fact looking at an ABCD pattern higher to $500 per share level. And for this pattern to remain intact, this $100 per share level point C is really important. Now this is something for really long term play. It's more for investors or for monthly chart. But from a pattern perspective, this is how we are looking at this pattern formation. Now, I want to keep this video brief, so I'm not gonna take a look at all these stocks, but let's take a look at Shopify. So let's go back to the daily chart of the Shopify. So what we are looking at is that the Shopify found resistance from the top of this channel, then it retraced right to the 38.2% Fibonacci retracement. It rallied right up to the 78.6% Fibonacci retracement. Now if it's gonna find a good amount of resistance from this 78.6% Fibonacci retracement and it doesn't rally in, let's say, next 2 to 3 trading days, the chances are that perhaps we could have an ABCD correction where it could take the price down to about $50 to $47 per share level. And at that point we'll have to assess the price action, because going below would be more negative for the stock, because we'll be breaking below the 200-day moving average. So this is the zone that we are looking at, anywhere between 53 to about $47 per share level for this stock. And the 38.2% Fibonacci retracement from the all-time highs to the lows is around $82, and this is our target. The likelihood is that if this low remains intact from the 18th of August, that $82 per share level is going to be the target. Let's also quickly take a look at this on the weekly chart. So we have a nice trend line here. We have a 20-week moving average. The 200-week moving average is above the 20-week moving average, so that's not very positive from a momentum perspective. But that's also where the 38.2% Fibonacci retracement is something that we are targeting. So we'll have to wait and watch this level of $82 per share level, roughly speaking, uh, how the price is going to react from there, and whether it's going to keep on rallying from there, or whether it was just a bear market action which took us here and then market begins to pull back from this level of $82 per share level. So this is what we are watching in the key US stocks. Apologies, not able to cover all the stocks that we like to take a look at for this video, but what I'll try to do is make another video for the US stock indices that we like to follow. So thank you very much for watching the video. Good luck and good trading.